Okay, now here's an important one. How much coverage should you have on your policy? So the best thing I'm going to tell you is don't trust your insurance agent on how much coverage that you need. They don't know the true scenarios of what property you have, what contents you have, etc. They simply put your address into a program that spits out numbers, and I can tell you those numbers are usually wrong, and many times you will be significantly underinsured. So let's go over how you can determine what you truly need insurance coverage. First of all, let's talk about coverage A, your primary structure. It's a pretty simple calculation. Find someone in the construction industry, ask them, hey, a house like mine, how much is it going to cost to build a new house like this per square foot on average? They're going to give you a number. If they tell you $200 per square foot, it's very simple. How many square feet do you have? Times that by that number, and there you have the baseline of what you need. Now you may have added features in your house, a sauna, whatever it is, add to account for that. If it's a pool, add to account for that, etc. And do that calculation every year when your policy renews because prices change. Coverage B, this is other structures. This is actually one of the coverages that we see most homeowners are not properly insured on. I can't tell you how many times I've seen homeowners with $50,000 worth of other structure damage, but they only had $4,000 worth of coverage. Again, the insurance carriers typically assign a percentage of whatever you choose for coverage A. They're just going to do sometimes 2%, 5%, 10% of that. So you need to make sure your agent understands your true needs. Remember, a fence alone can cost over $10,000. A shed can be $5,000. If you have a detached pool, that can be a significant amount of money. A detached garage can be a significant amount of money. So these numbers add up. Make sure, look at what your other structures are and account for what your true numbers are that you need to be covered for. Next, let's talk about contents. Now, understand contents. This is to replace what you have, even though you may not think of it as worth that much. Most homeowners reach the point where they have accumulated a lot of items. For example, take the shirt I'm wearing. If I were to sell this in a garage sale, maybe I'd get $1 for it. However, these shirts cost me $35 each shirt to order. Therefore, I may have a whole bunch of shirts that are old. Resale value is only $1 a piece. However, that adds up at $35 a piece. So therefore, don't underestimate your contents. I typically say absolute minimum $50,000, and even that I don't really feel is enough. You should really have a minimum of $100,000 in contents. Now, beware. When it comes to contents, there's certain categories that your policy is going to limit. Guns, art, cash, and jewelry. All of those are typically going to be limited to about $2,500 depending on the policy, more or less. And therefore, if you have a significant amount in any of those categories, then you want to go ahead and talk to your agent about getting a rider or a separate policy to cover your contents. And finally, loss of use. This is to cover you again if you have to be out of the house. Now, what I say is take a look at similar houses in your neighborhood, see how much they're renting for. You want to have at least 1 year's worth of rent. So if a house is renting for $3,000, you want minimum $36,000 of loss of use. If you want to be on the careful side, get 2 years worth. I already have a car insurance policy. Should I just go ahead and get a policy with the same insurance company since I'm already using them? The answer is no, that's not necessarily the case, and there's 2 reasons for that. Yes, when you get another policy with the same insurance company, typically you're going to get a multi-policy discount. That being said, there's 2 things to consider. Number 1, how much is that discount and how much would a policy from another company cost? Just because they're giving you a discount doesn't mean they're the cheapest policy. And second of all, who is that insurance company and how do they perform? For example, State Farm, one of the largest insurance companies out there. I will absolutely tell you, even if you have your car insurance with them, do not get your home insurance policy with them because in the industry, they are known as one of the worst insurance carriers out there when it comes to paying out claims. And if you do suffer a loss, you may have a fire that destroys your house, you may end up fighting with them in court for years to get paid properly. So take into consideration their reputation for paying claims as well as what the true cost of the policy is. So this next question, kind of funny, don't get it too often, but what happens if I can't pay for insurance? Well, to be quite frank, if you can't pay for insurance, you can't buy a house. Now, that being said, what happens more often is a couple of years go by, the premiums go up, and you stop paying your insurance. You say, I simply can't afford it anymore. Well, understand, you committed to the mortgage company that you're going to keep insurance, and if you drop the insurance, the mortgage company will be notified, and the mortgage company is going to take out a forced place policy. What does that mean? They're going to take out with their insurance company a policy on your behalf. They're going to charge the premiums to you to your monthly mortgage payment, and they are going to then have this policy on your house. Now, why do you not want that? For two reasons. Number one, that first forced place policy many times is going to be significantly more expensive than a policy you can find on your own. And number two, if you get that forced place policy, it protects the mortgage company, not you, and therefore your rights are severely limited. So essentially, you paid for a more expensive policy that protects you a lot worse.